Hey everyone, we're going to be looking at the euro today. The big thing here is this hourly stop run. It's something we mentioned in the room. I didn't think we'd get this deep of a pullback. We're been out of the room for 15, 20 minutes or so, and we're just getting a little deeper pullback than as we get that deeper pullback, we're getting confirmation that what this giving us another possibility for an entry, and so as we go into the 15 minute, keeping in mind that hourly stop run, what we see on the 15 minutes, we've seen multiple retests of yesterday's high, and it's from this point that I think the entry, at least in my opinion, for my risk tolerance, is safe enough. And what this is going to allow for is in this case, I'm going to be ending up going into this trade with a 30 pip stop loss because with an entry from right around this point, 45.46, I actually got filled at 45 on this, 45 and 2/10 on this position. But with that entry, you notice the highs here are set at 31.72. So if this is the stop run, normally they don't take out the highs or the lows of the stop run. In this case, it'd be the highs of the stop run. So I would expect that point to hold in 30 pips. Would more than protect me from the entry of 45, which is right here. Plus spread would still be protected by a couple pips. So even if we see a little deeper pullback as we're getting right now, which again is not uncommon. Oftentimes you will see a pullback on the stop run. In other words, you'll see a stop run, it'll work off that stop run. Some people made some nice money on that euro, but it's pulling back and retesting. Oftentimes you'll see a retest to the center point of that stop run. So I would expect it to stop somewhere between here, 55 and 60 at the highest, but we'll have to wait and see. And again, holding that, we'll hold that position in expectation of that stop run actually having some larger follow through to the downside. But we will update this trade as we go, and I'll be back as time progresses and as we move along with this trade. Alrighty, guys. Well, we're back on the euro here. Going to be, as far as the euro is concerned, what I'm doing here at this point is I move the stop to break even because we've really stayed in a lot of accumulation all day, and although we have started to break down somewhat, and there was somewhat of a small top, small essentially double top resistance point here, and when we blew past that, it was somewhat of a smaller stop run. So again, just adding other clues to this trade, which is giving us an indication that again, although this was a smaller stop run, it still illustrates a purpose. They pushed the price beyond a double top, inducing any further buying they could, and then selling into that buying pressure immediately. If they were selling into the buying pressure here, then more than likely, or then the position that's still being accumulated is a short position. So considering that, again, the entry's still up here, right around the 46 area, and considering that where we're at right now, it's roughly up 20 or so pips. I'm looking at getting out around plus 40, and the reason for that, I'm not really looking at holding this one for a long time. Yes, we could see a deeper reversal, and that's possible because the bigger stop runs to the upside, but you got to figure in the pound, and we'll zoom out to the pound, and this is where correlation comes into play. We've seen a first push up, we've seen a second push up, and the logic of how smart money tends to drive the price. Again, how do they tend to drive the price? Well, they tend to drive it in cycles of three. It's not again, it tends to be the common way the price is driven. Now, because we've been so stuck in this back and forth accumulating type price action where we hit the highs, hit the lows, make a false push up, false push down, you know, it's not going to deter me from how they generally tend to drive the price. That, just because we're seeing, see, a week's worth of accumulating price action or a little over that, where the market really doesn't have a clear set of levels, it doesn't change the fact that for the last 100 years or longer, how long has the market been talked about that it's driven in three cycles? It's been talked about for well before anybody listening to this video was born, and that's because that's the way the market tends to be driven. It tends to be driven in intraday cycles of three and longer term cycles of three. Again, it's not it's not something that changes just because the levels become foggy for a bit. But keeping that in mind, keeping the levels in mind as we go to, again, let me actually zoom out here real quick to the hourly, and we can see a first push up off of this bottoming formation. And again, manipulation down out of Asia before the second push up. So again, we have Asia coming up. If it's going to give us a textbook type entry, then then it's going to push down before pushing up. And that's on the pound. So keeping that in mind on the pound, if the pound is setting up for a possible third push up, using correlation here in regards to the euro, that's where things begin to come over with correlation. That's why I say with the euro, I'm saying, okay, if the pound does that, if the pound gives that third push up, then it's going to drive, the euro's looking for a third push up as well, or looking for a push up as well. And if that's the case, we're probably going to see the market come back down, retest 3,100, maybe manipulate through 3,100 before going to the upside. Again, talking in regards to a possibility. So even if it is going to go against me, I still believe we'll see that manipulation down. So I'm going to play it safe here. Look for plus 40, and again, look for 3106 essentially is going to be my take profit on this. We'll see what happens here, and that's what I'm looking for. Nice 2-to-1 risk reward on that trade. Nothing special, but because of what the pound's showing, I think the safe option is to just look for that 2-to-1 and not really look to stretch this out any further. May continue to run to the downside, but I'm not really concerned with that. I'm concerned with getting the 2-to-1 and calling it a day on that position. So we'll be back with the next update, see if the market does come into that 3106 point and give us an exit on the euro. All right, guys, be back in a bit. Hey everyone, we're back. We're wrapping up the euro here. I'll make a real quick wrap up. As you can see, it came down, hit our take profit 3106. The reason I said, again, it was looking like the pound was going to make a third push up, which in fact it did. And so what I said was, even if that's the case, it may drag the euro up with it. It really didn't, because the euro pound just took out the lows and started running down, which made a ton of pound strength, a lot of euro weakness. So but even if the euro would have ran up with the pound, what I was saying is that I think we'll at least see the manipulation move first. In other words, see it come down, take out the Asian lows before moving its way back up. That's why I set the take profit above 3,100. I thought we'd at least see the manipulation down to that point. Ended up hitting the take profit with obviously with ease on the euro. Now, one thing I also want to point out here, I ended up taking a loss on the pound yen later today, but the pound dollar really illustrates everything coming together that we'll look for, or I guess not everything coming together, but illustrates a lot coming together, and one of the trade setups that you can take. And it was a very clear and good, but plain simple, it went wrong. It was the same on the pound yen, which is why after this plus 40 trade, I ended up taking a negative 20 pip trade on the pound yen. But the pound dollar also offered that same situation where this was the third and final push up. In fact, we even in the daily market review last night, I said it's going to probably stop between 59.80 and 1.6000, that 20 pip range. That's exactly where we stopped, 59.92 roughly. But we had the third and final push up. It had moved at least 90 pips, moved 98 pips. So that's saying, okay, well, the move has a higher probability of being over. It ended in a topping formation, but then gave a stop run at the end of that topping formation. So very well could have seen somebody taking a short there, and I know a few members did. And the point I want to get at is that number one, as everybody knows, we take losses. We say that repeatedly because we don't know every piece of the puzzle. We know enough to run a very high percentage and run a great risk reward on the trades that we do take, but it doesn't mean that you won't have losses. And that's again, that's the pound illustrates that today. It was a great trade. I'd take it every single time without fail. Whenever I see a clear third push, that third push is moved 90 pips at least, it ends in a topping formation and gives me a stop run, I guarantee you I'm going to be taking that trade. I'm going to take it every single time. Uh, and out of those trades, generally you're going to win 7 out of 10. You're at least going to have that type of percentage on those type of trades where everything is clear. When things are clear, you're going to run a very high percentage. Now, there's two parts to profitability. There's win loss and there's risk reward. One of the great things about the smart money strategy is when we talk about 90 pips, what does that really imply? Well, that implies if you get into the market with a 20 pip stop and you're within 20 pips of the highs, that means if they're going to run at 90 pips, you're at least going to be able to eke out 2-to-1 bare minimum, or 3-to-1. Very often you're able to get in that range of 2-to-1, 3-to-1. And so even if, and again, you should maintain a much higher win loss than this, but even if somebody were to run 50-50 as far as their win loss is concerned, The risk reward of smart money setups on a 50-50 basis as far as win loss, which again you should run much higher than that, but even if you run it at a poor percentage like that, the risk reward can make a very good living out of it. And that's one of the parts that I wanted to illustrate about this trade. Yes, it took a loss on it, but generally when you see that big of a move, or you see that third cycle, it's moved 90 pips, completing a topping formation, giving a stop run. That's the type of trade that's going to give you bare minimum 2 to 1, 3 to 1. We caught a live trade on the pound yen. You can go back and look at the pound yen. But I said, and I kind of kicked myself in the butt for not getting more than 2 to 1 on this. But I said this is the end of that third push down. It ended in a bottoming formation, and gave a great stop run. There's some members in the room that caught that and rode it. Were a little bit braver than me and done much better than 2 to 1 on that position. But even on really what I call not a very good trade, still took 2 to 1 on that position. That's really the same exact setup on the pound yen as we saw on the pound dollar. Just had very good follow through on this one. The pound yen would have been a failed trade. And if you took that trade, you should applaud yourself because you took a great trade. Plain and simple, the trade did not have any follow through to it. And that is, that's acceptable. What's not acceptable is taking a loss on a trade you know you shouldn't take. Taking a loss on a trade that you it fulfilled all the criteria that you look for. That's a trade you should never regret because again, you followed your criteria. You followed how smart money generally tends to move the price. Plain and simple, didn't have any follow through. So sorry I added a bit more onto that video, but I thought it would be helpful for everybody and again give you a little more insight into generally picking the end of the smart money run. So hope this video helps, guys. And if you took the euro trade with me, you did pretty well on that. If you took this pound, you gave a little bit back of that euro profit, but still overall between the two trades did decent, and we'll be looking for the next setup. So I will see you with the next one, guys. If you have any questions, feel free to post below the video or give us an email. Until next time, happy trading.